Good morning, sunshine. It is Thursday, August 26th, and I am Kenny Polcari, your host of the party, with today's morning market comedy. Comedy, isn't that interesting? Commentary. Everything you need to know about the markets, what's happening. Maybe it is a comedy. Who knows? Maybe that was just a Freudian slip. In any event, what's happening? Stocks make new highs yesterday, right? The S&P kissing and piercing another century mark. Just weeks after it pierced 4,400, it pierced 4,500. Just unbelievable, amazing. It's on fire. But let's talk about it. So what's happening? It is finally Jackson Hole 2020 run. That begins today, right? Markets making new highs yesterday as we go into this Jackson Hole meeting. The VIX reflecting zero event risk. And oil traders taking profits after the 9% spike in about 3.5 days, right? And what are we having for dinner tonight? We're going to try the pan-seared garlic butter ribeye. Delicious. Anyway, look, investors took stocks higher yesterday on lower volumes. We discussed this, right? It's a relatively quiet time of the year. It was quiet on the news front. It's relatively a quiet time of the year. Eco data, a little bit better than expected, which flies in the face of some of the more recent data that we saw earlier this week. Durable goods down only 0.1% versus the expected loss of 0.3. Transports, it was up 0.7% versus the expectation of up 0.5%. And mortgage applications were up 1.6%. Lots of chatter around Nordstrom's and Dick's Sporting Goods, right? Both reported yesterday. Nordstrom's disappointed and got slammed, losing 17%, while Dick's blew the roof off the place and surged by 13%. And then it was all about the state of retail and how you better go out and buy all your Christmas presents now for fear of supply chain issues and not being able to get anything. They should be ashamed of themselves. Whatever. It didn't hurt the indexes one tiny bit. And rising bond yields, the 10-year closed yesterday yielding 1.355%. Now that's up from 1.255 just last week. And that helped to send the financials higher. Dow Components, JP Morgan up 2%, Goldman up 1%, American Express up 3%, all contributing to the surge in the S&P Financial ETF, the XLF, which rose by 1.2%. Energy, the XLE was up 0.8%, Industrials, XLI, up 0.6%, Basic Materials, XLB, up 0.5%. Also moving higher on the idea that the House has passed its blueprint for that massive $3.5 trillion spending package and what it means for those sectors. Now remember, it is just a blueprint. It is not the final bill, so there's still some risk to whether or not it passes. And while Nancy's telling us that the House is all in, the squad, the progressive left, is telling us that if they don't get every single thing they want when they want it, they will not vote in favor of this bill, even if it comes to the floor. And that's it, leaving everyone just a bit unsettled. But recall that they want to vote and pass the massive bill before they vote and pass on the smaller $1 trillion real infrastructure bill, because the smaller bill has already got sufficient support of both the House and the Senate on both sides. So that's not the issue. They're just going to stamp their feet until they get what they want. So let's see how this plays out. In the end, the Dow rose 40 points, the S&P up 10, the NASDAQ up 22, and the Russell up 8, while the Dow Transports gained 102. And if you didn't hear it yet, you're going to hear it right now. The S&P made its 51st new record close in 2021 yesterday. Not only did it kiss 4,500, but it pierced it, trading as high as 4,501 before settling back in at 4,596. It's amazing, really, right? The indexes are on fire, a fire that may eventually burn out. So you have to ask, what could start the fire to burn out? What could cause that? Well, the launch of today's Jackson Hole Summit might. It's no longer an in-person summit, but rather a virtual Zoom summit. Yet as of yesterday, the market seems to be unfazed and investors are not expressing any excessive concerns that Jackson Hole is going to surprise at all. There does not appear to be any event risk priced in by the VIX, right? The VIX, which is the fear index. In fact, the VIX has fallen in the last couple of days, and it fell again yesterday by another 2%, 2.5%, ending the day at 1679, which also helped to send stocks surging, right? So that suggests that investors do not perceive there to be any event risk at all. So Jay's not going to say anything to surprise us, which is exactly the issue. Because there is always risk, and it usually hits when everybody thinks it won't, right? When everybody's just complacent, suddenly you get whacked. Now, you know what we think we can expect today and tomorrow out of Jay Powell, right? He actually speaks tomorrow. We know when he's going to reiterate his narrative. Yes, things are improving, but the Delta is still a potential issue. Other variants, potentially an issue. Recent geopolitical events have only added complexity to the conversation. Infrastructure talks in D.C. remain a bit unresolved, all while inflation remains transitory. So considering all this, while we are discussing, meaning the Fed, the idea of tapering, and while many members of the committee are on the other side of the fence, we're just not there yet. We need more time, we need more information, and if the information continues to show improvement, then yes, we will begin the tapering at some point in the future. Maybe it runs about 10 or 11 months. Oh, and the tapering does not mean that interest rates are going anywhere. They are mutually exclusive. One does not force the other. You see how that works? He announces it, or at least he reiterates it because they've already announced it. And then he leaves the door wide open without committing himself, remaining very, very coy, which is exactly what he's done all along. So this isn't a new strategy. The street is split right down the middle on whether Jay will provide any additional clarity at all, which is exactly what the market is pricing in, right? No clarity. Any hawkish surprise will send the algos into a sell panic mode. In any event, it's going to be what it's going to be. So just strap yourself in and get ready. This morning, U.S. futures are lower, but let's not get hysterical. The Dow's off 1 point. In fact, I think it's just recently turned up. The S&P is down 5, the NASDAQ was down 38, and the Russell was down 5. Hardly anything to get yourself worked up about at all, so don't get your panties in a bunch. The VIX this morning has picked its head up just a bit, rising 4%, trading at 1750. So is that suggesting maybe there's a change in psyche? Is somebody suddenly suggesting that we're going to hear something we didn't expect? And the 10-year Treasury is yielding 1.35%. The dollar index is up 7 cents at 92.90, and that's giving some oil traders a reason to take profits. Remember, oil has surged more than 9% in 4 days. It's off about 0.75% this morning. For no other reason than traders are trying to create some alpha after the explosive move higher, after the explosive move lower. Did you get that? Remember, oil fell 15% in 3 weeks, and now it rose 9.5% in 3 days. So the trader types are hitting the sell button and ringing the cash register. Nothing more than that. Demand is not going anywhere, period, the end. Weakness this morning is coming from the tech sector, which is not a surprise considering it's rallied 7% in 1 month. And if there's any fear at all that the Fed is going to surprise us, then the growth names, tech, will be the first ones to get hit as investors use them as an ATM to raise cash to put to work in what? The value names. Recall how the value play had been outperforming growth for most of the year. And then suddenly, when the markets thought it was lower for longer, growth overtook value, right? And now it's outperforming value by about 3%, right? The SPYG is up 21%. The SPYV is up 18%. So stay tuned for that one. Expect to hear from a range of Fed heads over the next couple of days, both in the media as well as from the Jackson Hole Zoom event. St. Louis' Jimmy Bullard always out front, leading the pack. Expect him to be the first one to chime in today. I'm sure he's going to be the first one. Eco data today includes initial jobless claims, an expectation of 350, continuing claims of 2.7 million. The second revision of second quarter GDP expected to be 6.7%. Remember, the first go around was 6.5%. And the Kansas City Fed survey of 25. That would be down from 30 last month. So kind of a mixed bag of eco data, but no one's really going to be paying that much attention. European markets at 6 a.m. this morning are all a bit lower, right? For no other reason than caution ahead of the summit. Yesterday, the European Central Bank chief economist, Phil Lane, told us that he is not worried that the Delta variant is going to cause any significant economic impact across the zone and that he expects a robust recovery through 2022. And that helped the markets yesterday. Today, no one's paying any attention to that at all. And like I said, at about 6:30, all those markets were down about 0.4% across the board. Bitcoin is trading at 47,000. Ethereum is trading at 3,100, right where they were trading yesterday. No change at all from where they were yesterday. So they're just kind of churning in place. The S&P ended the day at 4496 after piercing that other century mark, 4,500, right? If only briefly. Remember, street analysts have boosted their year-end targets for the index, with many of them ranging now between 4,650 and 4,800. The trendline channel is now 44.12, 46.25. So at 4,500, we're smack in the middle of that channel as we move into the fall, which is, as you know, a seasonally weak time for the markets. In any event, remember, you can text the word invest to 21,000 to get my digital business card delivered directly on your cell phone. Feel free to download it, send it off to me. You can send me off an email, a text message, give me a phone call. I'm always happy to engage, talk about markets, talk about planning, thoughts, concerns, issues, ideas, whatever. You also know you can follow me on Twitter. My Twitter handle is just my name, at Kenny Polcari. And you can follow me on Instagram at KennyP1961. And today I'm hosting a webinar interviewing CNBC's Ron Insana about the State of the Union just ahead of Jackson Hole. You can find the link to register that. It's a free registration on my Twitter feed. So if you want to join in at 12 o'clock today, feel free, right? It will be live questions, so you can ask me questions, ask him questions. So what are we having for dinner tonight? We're going to have the pan-seared garlic butter ribeyes. Oh my God, so delicious. Now, it's a simple dish to make, and it only requires just a few things, right? You want ribeyes that are off the bone. You want them boneless, right? Maybe 3/4 pound or a pound each, 1.5 inches nice and thick. You're going to need olive oil. You need kosher salt, pepper. You need about a half a stick of butter and 3 or 4 large cloves of garlic that you've sliced. You're going to pat the steaks dry with a paper towel, right? Get all the moisture off of them so that you get a good sear. You want to season them generously with the kosher salt and pepper. Rub it in, kind of massage it into the meat, set it aside. You want to preheat a pan kind of on medium high. Brush it with a little bit of olive oil. Don't use a lot of olive oil because you don't want it to splatter. You just want to brush the bottom of the pan. When it's nice and hot, put the steaks in and sear them. You'll hear them sizzle when you put them in, right? 3 or 4 minutes on each side. You just want that brown crust to form. Then using a set of thongs, put them up on the edge and brown the edges all around as well. Now put them back down and add the butter, right? Take the butter, you've kind of cut slices in and put the butter in the pan. As the butter starts to melt, add the garlic, the sliced garlic into the pan. As the butter starts to melt, now kind of tilt the pan a little bit, take a spoon and spoon the garlic and butter over these steaks as they continue to cook, right? So you want to cook these till they're about, when you stick an instant read thermometer in there, about 145 degrees, right? Because when you're going to take them off the stove, you're going to tent them and cover them. They're going to continue to cook for another 10 minutes. That's what you want. At that point, they should be perfectly done. So if you want a medium steak, when you stick the thermometer in the steak, you want it to read 145. That's perfect. Take it off, cover it, tent it. If you want it done more, then leave them on more, right? But remember, when you take the steak off the heat and you tent it, it continues to cook. The temperature actually continues to go up. So it will continue to cook, which is why if you want a medium steak, seems to be like 145 is the right temperature, because then when you take it off and you wait 10 minutes, it typically goes up probably to 150, 155 degrees. And so then when you slice into it, it should be a perfect steak. Now look, once that's done, then you serve the steak. I would serve this like with roasted red potatoes. I love that with this dish, along with a big mixed green salad. It's got scallions and red onions and cucumbers and tomatoes. You can even put chichi beans in there, salt and pepper, and some oregano. You can dress it with fresh lemon juice and olive oil, or red wine vinegar and olive oil. You can also use a bottle dressing if you want ranch, or if you like something like that. I tend to like the cleanness and the crispness of the fresh lemon juice with the olive oil. But in any event, you're going to have it the way you're going to have it, and make sure with this one you drink the really robust red wine. Again, for this dish, I would drink the Brunello di Montalcino because it's robust and thick, right? I mean, could you drink a Chianti, a Pinot Noir? You could, but it's not robust enough for what I think this dish deserves, but it's your call. In any event, look, the day's about to get started. Jackson Hole is only hours away, and my webinar at 12 o'clock is there for you to sign up for. So I'm going to put the link on my Twitter feed. I'm going to put the link also on my LinkedIn feed. So feel free to sign up. It's free, like I said. You can join in. It'll be live questions. You can type them in and ask. It'll be about a half an hour, 40 minutes long max. And I hope you enjoy it. I hope you join me and enjoy it. So until then, take good care, and I'll see you tomorrow.